What's up, guys? It's January 26th, 2024. Another range day in the markets. The higher time frame EMA is holding up as support still, but the bulls are making less and less moves off of it. So, see what happens next week. It'll be cool. They had a rip off yesterday, closed higher, trended lower, almost identical days, honestly. But today was like more of a sell vacuum, and then we just went range bound. Which look at the first 6 bars of the day. It almost tells us that's going to happen. First 6 bars of the day with a small gap down, and then it bulls pushed up and making a double top of yesterday. Here is the double top. And you can take that sell into the EMA. Second bar is really bad follow through, giving us a micro double top. So it's a micro double top, overall big double top. Bar 3 makes a lower high. It's an indecision candle. Bar 4 is a trend bar for the bears, and bar 5 sells into the EMA, but we close above it. Bar 6 is a push up off the EMA. Kind of could be a pullback from yesterday, looking like a leg 1, leg 2, leg 3 deep pullback into the EMA. Bar 6 is it an inside bar? It's kind of an inside bar, barely an inside bar. Inside bars are about 10% of the market, and it's the only bars that aren't breaking out. Every bar you see here is a breakout bar. And, okay, what I mean by that is this bar is breaking out of this bar's range. This bar is breaking out of this bar's range. This bar is breaking out of this bar's range. This bar is a range bar attempting to break out of this bar's range. You see what I'm saying? A breakout is considered any candle that closes one tick higher or lower, depending on which way the breakout goes, to the previous bar. Al Brooks likes to say 80% of breakouts fail, and he's right. But we're talking about the specific bars. See, this is 80% of breakouts fail, 80% of breakouts fail, 80% of breakouts fail. So from that perspective, it's right. But on a more micro perspective, these are all breakout candles. And then that leaves it up to us, our discretion as discretionary traders, if there's overlap or not. So here's a lot of overlap. Market is range bound, trend, range bound, channel, you could say, range bound, trend. This was like sell vacuum. Then it goes range bound, tries to break out, and ultimately comes back into the range. Higher time frame being the support. Bar 8 is a failed breakout by the bears. I saw this candle race down, and then it slowly came back up. It would have been really nice if it had a bull body close, but then bar 9 shows us a close. Bar 10, same idea, bear bar, but it's a bear bar, so I'm starting to understand how these bars are printing. This has bull bar tendencies because it came down, bulls closed higher. It's in a bull trend, we're above the EMA, but since this bar went one tick below this bar, it gets printed as a bear bar. If it went one tick higher, came down, and then came back up, it would have got printed as a bull bar. So it's pretty cool to understand why the bars are the way they are, and it lets you get a little more context out of it, because this is a bear bar, no doubt. It printed a bear bar, but it had bullish tendencies. Bar 11 is breaking out of this range here, but lots of overlap. It's about 50% overlap. By the prior bar. So what I mean by that is, so if that's the bar, look, just over or just under. So it's just how do I say this? This bar has less than 50% overlap of the prior bar, and then this bar has less than that. Good breakouts will just barely get to the 30% level of a pullback, like right here. That's a 30% level pullback, so it's a good breakout, strong trend. Let me show you. Because sometimes I really wonder, am I conveying this message correctly? Okay, this might get confusing. So ignore that's the one I was looking for. And then I take off. Let me take the 50% mark off. This is a good way to measure pullbacks. So we got the bar's range, right? And you see what I mean here? 30%, 50%, 100%. So this is a 33% pullback. This is strong. It came, hit, did I say 33? This is a 30% pullback, and it went off. Now look at the next candle. See, this might be a 50% pullback. So the trend is getting weaker. Right there, a little bit, one tick there. So this one went a little bit deeper than 30%, but not as deep as the 50%. Okay, that's all right. Then look here. This pullback. See how the pullback is getting a little more deeper, less overlap, more pullback. And now look at this doji. Let's see the pullback on the doji, the range bar. So only one candle really had a good 33% pullback. And then we start to get more and more overlap. So there's more buyers at the EMA than at highs, and there's a lot more overlap in range bars at highs. So this is a buy the close rally, but it's coming to an end soon. When we see a doji and a buy the close rally, I keep saying doji, I gotta say range bar, because Owl only uses trend and range bars. When we see a range bar and a buy the close rally, or sell the close rally, sell the close sell, it's not good. It could mean it's coming to an end soon. So let's measure this pullback. I don't do this live, but I do this after the markets are closed, and I've been really trying to understand the nuance of what we're doing. I know a few of you are watching Quant Systems lives, and this is kind of where I'm getting the ideas from Quant Systems. Quant Systems is a branch off Al Brooks. It's not a branch. Al Brooks doesn't have anything to do with Quant Systems. It's Ali's thing, but Ali based all his research off Al Brooks's methods. So it's a branch. It's a more systematic way to trade what Al Brooks is teaching us. Look at this pullback. It went all the way to the 100% level. So this is a weak follow through candle. Lots of overlap and deep pullback. Not good. Look at this range bar. See look at this next bar. It's pretty much not even a breakout bar. So if this is the range, this bar came to the low and closed on the high. My throat is so sore today, I don't know why. Right there. So see how it did not make a new high? That's not good. This can be an inside bar. It's hard to call an inside bar unless it's like one or two ticks close below here. But yeah, I think you guys are starting to understand what I mean. So see this? We could say this is a 2-bar reversal. This is a pattern. So the market tries to push up, bears push it down, and then we see a pullback right away. There is also a lot of bullish momentum, so I don't really think anyone would get short right away. If you did, scalp it. You are more braver than I am. And then we can measure this pullback too. Throw that up there, see? So this is starting to get a little bit stronger. Like one pullback, like one went down, pullback, like two went up, and then it made a double bottom. Gotta see how this stuff can start to stack, these little nuances. Here's the trend line here. The trend line broke. On a good trend, sometimes the first break should lead to a good fade back to the recent high, and I actually got trapped doing that today. I fumbled the bag pretty bad. My account is pretty much... I've already accepted that next week there's a very good chance I lose it because I got caught up bad right here. I bought this. I hit out really quick because I was like, okay, this is a strong bar. Waited. I bought this bar and this bar. I bought the high of this bar, and then it sold off. So I hit out again really quick, and I was like, oh my gosh. And then it started going up, and then I bought this bar, and look what happens. So it is what it is. I thought this was a really good buy the close rally, but at the end of the day, the market has been more range bound. Look at this price action here. This really sucks. I don't know. I'm sorry. The less money I have to trade, the quicker I'm hitting out of trades, good and bad. So it's not working in my favor. Pretty much the last 2 days after I made a maneuver. What happened yesterday? I can't even remember now. Something happened down here or here. I started hitting out of my trades fast because I realized my P&L is dropping, and I hit out of a good trade there. I hit out of this trade within like less than 2 minutes. So I'm gonna get this payout. No promises if it's gonna be on this specific account, but this is the longest I've gone with a live account, and that's how I'm gonna look at it. I trade breakouts, I trade second legs. I have the system. I just gotta get better at reading, so I'm not tripping. Back to the price action. We are range bound here. It's sell high, buy low. Except if you buy this, you'd be buying into a breakout. Not good. This is a good breakout here because it's a breakout with follow through after the market's been trending. We have bearish pressure already from the open. We have all these wicks indicating failed breakouts, but that does tell us that bears were trying to short, and they may have just got trapped. You know, this is actually talking out loud. This was a buy vacuum. This was a buy vacuum because I also got caught here. Oh man, this is James and them. They talk about having multiple types of systems, breakout systems, and mean reversion systems, and now I'm starting to realize the importance of a mean reversion system because your boy keeps getting caught out in the worst way possible. Sometimes, it's frustrating. So, anyways, range bound, good breakout below the EMA, breaking out of the previous bar's range. On a 15-minute time frame, this is one good bar, and we can take that for a measured move. The reason I did the pullback right there is because this bar was somewhat climactic. This bar was somewhat climactic, and from here to here is a pullback. It's a micro pullback. Goes down, and you will get filled here with a couple points left over. And the market, again, goes range bound right away. So if you aren't fast with these leg 1, leg 2 moves, this is also the same concept here. Oh, excuse me. Oh, let me delete that. Same concept here. See? Oh, that one was too big. Really hard day from a leg 1, leg 2 perspective because, yeah, I got chopped up. But also, I hit out of my winning trades, so it is what it is. Here, another range. Within Al Brook's course, he talks about how on range days we can have a sudden sweep or surge to one place, then price surges to the next spot, and then we go oscillating. I think today was a really good example of that because price vacuumed high, oscillated. Price vacuumed lower, oscillated. If you didn't catch one of those two legs, you would have to scalp out fairly quickly. Here's a good breakout. Look at the difference between this bar and the previous bars. But we have to ask ourselves, how much breakout is this going to be? How much can we get? I think you do get a 1-to-1. Oh. So we do get that 1-to-1 with bar, 65. I'm kind of jumping around here. You know, this weekend I'm going to figure out a way to, I want to do these so properly, like, I'll talk about the bars, first 6 bars type of thing. I'm going to write it out and figure out a system to always convey the same message instead of jumping back and forth. I do always want to show all the leg 1, leg 2 moves so we can start training our eyes. Oh, that was weird. Yeah, there's a leg 1, leg 2 move there. And it's hard to decide. You're going to have to figure it out for yourself when you want the market cycle to reset. And what I mean by that is this a leg 1, pull back leg 2, pull back leg 3, and then bears make money, and then leg 1, pull back leg 2. Right now, the easiest way to do it is just to wait for a strong move, and then an opposite bar, and then that becomes the pullback. Strong move, opposite bar, first pullback. This is a bear channel. Remember, high ones are traps. There's usually sellers above high ones, and it's usually a bear channel. When we have a bear channel after a bull flag, we want to see a good bar. If it's an outside bar shaped like this, that would be great. Outside bars can be traps because of the high of the range. An outside bar inherently looks like this. This is just an example. So if these were the 2 bars, this is an outside bar. So it's above and below the range. And that means sell orders got filled and buy orders got filled. Buy orders got filled at highs, sell orders got filled at lows, so lots of trap traders. And it's not necessarily good to trade outside bars unless there's a lot of overlap. Unless there's not a lot of overlap. Because outside bars can be treated as breakout bars if there's not a lot of overlap. And if you guys caught the Blue Book Chapter 1, an outside bar works best after a trend line break. So you want to look for an outside bar on the third and fourth flags. That's kind of an outside bar. It's not that good. It has a shared low. Not an outside bar. Not an outside bar. I had a good example. Okay, here's kind of an outside bar. Barely. It's barely an outside bar because of the tick. Trend line break after a good bull channel. Lots of good context for this, but then there's really bad overlap. So do you want to take it? You could take it from a range bound perspective. I don't know if it'll lead to another bull trend this late in the day. So yeah, lots of little things here and there. Today was a bit of a quicker breakdown because it's just a buy vacuum, sell vacuum, oscillate, oscillate. Let me just go over the daily time frame real quick. Daily time frame, once again, bulls have failed to meet their PT of a measured move from Friday the 19th here, but I showed you guys yesterday that bulls did get 2R of this bar. So if I pulled the wrong measurement, then it makes sense why the market's stalling because the measured move has already been met. Bears are getting more touches onto the EMA. However, bulls are still buying. Bears push in, gap up. Bears push in, gap up. Bears push in, failed gap up. I noticed that here. If the bulls don't take back over, this is going to start to give a head and shoulders appearance. And again, a head and shoulders appearance is just 3 pushes in one direction. In this case, it'd be a head and shoulders for the bulls. Push 1, pull back, push 2, pull back, lower high, push 3, and a sell. Or it's a failed breakout, and we go. We've had so much bullish momentum, it's really hard to say if the market's consolidating for higher. We're coiling up to a flag here. Oh, that was bad. Flag here. EMA is acting as a dynamic trend line. So I think a cool day is going to come, whether that be a strong sell or a good pop off the EMA. On the daily chart, excuse me, it's a bit late. On the daily chart, we've just been trending higher, and we are extended away from the EMA. We haven't touched the EMA in about 7 days, so about a week, but 7 trading days. So it'll be interesting to see what happens. I hope you guys had a good Monday. Hope you guys had a good weekend. Use your stop loss. You studied. Maybe drink some wine. Yeah, have a good night, everyone. Thank you for your support. Welcome to all new followers. I trade price action from an Al Brooks perspective. I'm always going to trade price action from an Al Brooks perspective. And admittingly, I am a big fan of Ali, James, and Brad, and everyone. So if you guys hear me throwing around Ali's and James' name, you guys know where it's coming from. It's Quant Systems. And please check out, if there's anything to check out, it's Quant Systems page. They do lives, I think, once a week. And definitely Al Brooks. Definitely, if you guys are liking these breakdowns, dive deeper. This is a very surface level breakdown. I see Trader Chick. She's always in every channel she can get to. She is talking, asking questions. Check out what she's asking because I see it. She asks good questions. Jared, I hope you're doing good. Phoenix, thank you for the comments. I'm reading them. Guys, thank you, everybody. Have a good weekend. It's Friday. I hope you guys had a good Monday. Talk to you later. Bye.